thank you so much for inviting me and for having me presenting tonight. It's really a big pleasure for me. And normally this would be a good occasion to say it's good to be back. But with the circumstances, I'm at least happy to see some familiar names and familiar faces of Göttingen University, where I studied for 7 years between 2012 and 2019. And yeah, I'm always looking back with a lot of gratefulness when I look back to my studies, because I had a really good time at uni, and some of the guests will already know that I also was pretty committed to the student representation as a member of the faculty council and the senate, and yeah, I always tried to shape Göttingen University also in a way while I was there. So now it's good to give something back from what I experienced during my time. And yeah, as you correctly said, I work for GIZ, which is a consulting agency which is owned by the German government, consulting the Federal Ministry for Cooperation and Development, and also implementing the German development cooperation globally. And yeah, the topic of today is who insures a burning house? I think we all are pretty much familiar with climate change as a topic and the risks that come along with it. And I picked one picture for the start from the cyclone Idai, which made landfall to Mozambique in spring 2019. And I think we all remember the images quite well of the floodings, of the destroyed houses. And we do see these pictures more often. And we also do see increased severity of extreme weather events over the last years. And this is a worldwide phenomenon, and it can be linked pretty well to human-made climate change. So we do see increased frequency in storms, droughts, floods, heavy rains, bushfires, avalanches, everything. And in 2020, the overall sum of losses due to events that can be related to climate change summed up to $210 billion US, which was a big increase compared to 2019, when it was still 160 something. So the figures are a bit volatile, but you can definitely see a trend over time here. And the overall protected sum of these losses, so the sum that is insured by risk finance products or insurances, sums up to $82 billion, which sounds like a quite substantial share. But this is heavily leaning towards the industrial countries, and the share of insured losses in low and lower middle income countries is only 3%. So 26 million people might fall back into poverty every year due to extreme weather conditions over the next years if we do not take action. And then in 2020, we faced double trouble. We did see compound shocks. We saw that climate disasters and conflict and pandemics can overlap, and the effects are not only additional, but they multiply each other. And for example, in 2020, we did see the most severe hurricane season in the Caribbean, and many countries already were very budget constrained. So the reaction to these catastrophes was really hampered by the pandemic situation. And this is a double burden for many countries, and it really calls for global initiatives to tackle this. So in general, there are three main approaches financially to tackle disasters. I picked three examples from the solution space under InsuResilience to illustrate a bit what people can do, or what institutions can do to overcome financial risks. So on a micro level, insurance is a pretty typical thing. So we all have a liability insurance, probably. Some of us even have a household insurance. Our cars are insured, and we are very familiar with what insurance is doing. But insurance in a climate change context is slightly different. So the insurance that is typically implemented in these cases is parametric insurance, which differs from our typical insurance in a way that when an event occurs, for example, if we have a car accident, we go to our insurance, we make a claim, and then the claim is assessed by an independent assessor, and then we get the money back. So we have to take action. But this is also what makes insurance really expensive, the assessment of the claims. And to overcome this financial extra burden and to make insurance viable, people developed parametric insurance, which is linked to an index, for example, rainfall. And when you want to insure agricultural yields in a country, you define a corridor of optimum or bearable rainfall, which has a top cap and a bottom cap. And once the rainfall exceeds or falls below this corridor, automatic payouts are triggered and automatically dispersed into the people's accounts or prepaid cards or whatever they use. And this makes insurance a bit more viable in the context, especially of low income settings. So microinsurance for farmers is a very typical product, and under InsuResilience, you would find the Global Index Insurance Facility, which is a big trust fund that supports insurance solutions in many countries with investments so that they can launch their products for farmers, for example. But it could also be property insurance in coast areas against flooding. So there are many ways. I just picked this as an example. And then on the meso level, this is maybe the most difficult one to understand because it is so indirect. There is GP, Global Parametrics, who insure credit portfolios. So in many agricultural settings in developing countries, it's pretty common to take a credit when buying seeds, for example. And when severe weather events occur in such a setting, people would default on these credits and they couldn't repay them. So the institution, Global Parametrics, would not insure the farmers, but they would insure the microfinance institution who offers the credit, so that the institutional structure that serves the farmers can be continued in the face of a disaster. And then on a macro level, the biggest solutions that we see in this realm are sovereign risk pools. There are three very big sovereign risk pools. There's the African risk capacity, there's a risk pool in the Caribbean, and there's one in the Pacific. And of course, no insurance would insure or would provide an insurance policy for a Caribbean island against tropical cyclones, because the risks are very high and they happen very frequently. So either the premium would need to be very high, which would not be able to, or which the country would not be able to pay, or the risk for the insurance would be too high, so they could not offer a product. And what these risk pools do is they collect insurance premia from many countries in a specific region. So for example, in the Caribbean, and then they pool these risks, and then these risks can be insured as a whole portfolio at the insurance market. And this diversifies the risk across the islands, for example. So tropical cyclones do hit the Caribbean, but they never hit all islands at the same time. And this helps the islands getting at least some coverage for the risks that they face due to climate change. So this is a basic overview of the solutions and approaches that we call climate and disaster risk finance and insurance. Of course, there's more, and there's of course also more complexity. I won't go too much into detail on this slide, but I just want to show you that there is a whole systematic of solutions that all complement each other. So if you look at the figure, you would see at the timeline, and the red line is the shock. So there's even products that can be paid out in anticipation based on early warning systems, for example. This works especially well for slow onset disasters, such as a drought. So for example, a drought in Senegal can be predicted typically 3 to 4 months in advance. And then payouts can already be installed to help out the farmers and even to distribute new seeds and other farming inputs, for example, to secure food provision in a country. And then on the vertical axis, you see the step from events that happen at high frequency but low severity to events that happen at really low frequency but really high severity. So I think what we typically hear is in the news is this was a 100-year earthquake, which means that an earthquake at this severity would only happen statistically every 100 years. So for these really uncertain events, other solutions apply, as you see in the graph, than for events that happen at high frequency and low severity. And as you can see at the very bottom of the figure, for these low severity events that are not that costly, very often own sovereign reserves or funds of a country can be used, while the more you go up in this graph into the higher severities, the more external support you need, which are the solutions that have a box with a darker shade. So for example, sovereign risk transfer, as I mentioned, these risk pools, they typically pay out for events that happen more rarely, but hit with a stronger severity. And to have a good, comprehensive disaster risk finance system in a country, you would never come along with only one of these solutions. So you always need a good layering, and you need to identify which risks apply for my country and which risks apply for a specific region. And then you combine these solutions that you see here to have a good disaster risk finance strategy for each of the layers of your specific country risk. Now I want to go a bit deeper into what the partnership actually is and what the partnership does. And the next slide is my very favorite slide. This is the partnership. So the InsuResilience Global Partnership was founded in 2017, and it brings together, as of today, 99 members from different fields. What do they do? There are, on the one hand, many different countries, mainly countries from the G20, which are most of the time, or all of them, donor countries, giving financial support into this whole endeavor. And at the same time, we do have countries that are recipient countries of the solutions, and they are mainly represented by the V20, the vulnerable 20. It's a group of not 20, but I think 84 countries, which represent the most vulnerable countries of the world with regard to climate change. And the whole partnership was installed with an eye level between these two groups, the G20 and the V20, to allow really good stakeholder representation from both sides. And then, of course, there are the multilateral institutions that are active in this field for years and years already. So the World Bank, pretty famous, the Asian Development Bank, the Inter-American Development Bank, and many other institutions. There's the private sector, because someone needs to insure the risk, someone has to take the risk. So you would find all big insurance and reinsurance companies of the world in the InsuResilience Global Partnership. We do have civil society institutions, because they are the most important voice of the people. and they are also the most critical voice in the partnership. They really bring in questions of implementation, of empowerment, of a pro-poor focus, and they are an important stakeholder group in the partnership to enable good solutions. We also have academic support. So there are academic institutions from the United Nations University, for example, the World Resources Institute from the US, and also some local academic institutions, and further initiatives and networks. So for example, the UNEP Finance Network or the Access to Insurance Initiative, which is another GIZ project. And then, of course, there are some implementing partners, GIZ itself, KfW, which provides the financial side of the German Development Corporation, and the risk pools. CRIF is the Caribbean risk pool, and the African risk capacity is the African risk pool. Since they have become own entities over time, they also became members of the partnership as implementing partners. So what do these 99 members and a growing number of members, what do they do and how do they collaborate to provide climate and disaster risk finance and insurance? There's of course a governance structure. I don't want to bore you too long with that. But there is a high-level consultative group, which is at the minister level, I would say. So there are two co-chairs of this group. One is Parliamentary State Secretary Maria Flaxbart from BMZ. And then there's the finance minister of the Marshall Islands, representing the V20, Minister Alfred. And these two lead a group of key stakeholders at a very high level. So we have heads of UN agencies sitting in that group, other country representatives at the minister level, and they are really the strategic governing body of the partnership. So they take the key decisions on the strategy. There's the InsuResilience Secretariat. That's where I'm working. It's a team of 17 people who do all the preparations for the high-level consultative group. For example, we do research activities, we commission further studies, we convene the other bodies of the partnership, and we also spread the word about InsuResilience, as I'm doing now, and bring the information to the field and also to the political level. The three boxes you see at the bottom are, I would say, the engines of the partnership where the work is happening. So the Partnership Forum is our annual assembly where we try to bring together all the 99 or maybe 100 soon members of the partnership to enable exchange, to share learnings, best practices, and also to connect people who, in our mind, could work together to implement a solution, for example, in a public-private partnership. In the past, we were able, for example, to connect insurance providers with the United Nations Development Program and the government of Bangladesh, and the three together formed a partnership to implement an insurance solution. The Program Alliance is the platform where we convene the implementing agencies. So this is really about the doing. We have the World Bank there at the table, we have KfW at the table, we have the UK-based Center for Disaster Protection at the table, and the Asian Development Bank. And these people implement most of the solutions under the InsuResilience Global Partnership. And in that circle, it's really a good exchange about what's working on the ground and what's not working on the ground. The sessions are always pretty honest, and it's always a good exchange there. And then we have three working groups where we have a gender working group, which is focusing on mainstreaming principles on how insurance solutions and risk finance solutions can be made gender responsive, because we do see a need for these solutions. Women are disproportionately affected by climate change, that's a fact. And there is the subsequent need for targeted solutions which address needs of women in developing contexts. Another working group is the impact working group. That's the group that I am managing. I'll talk about my work at the end of the presentation. And that's the group where we talk about how can we measure what's going on the ground, and how can we measure impact. And the last working group is the integrated approaches working group, where we try to find connections between the insurance work and the work of other entities. So for example, national adaptation plans or ecosystem-based adaptation. So there's a lot going on with reforestation and coastal resilience, connecting that to insurance. And that is typically discussed in the integrated approaches working group. So a short historical overview. The InsuResilience initiative was founded in 2015 by a G7 initiative. Back then, Germany had the G7 presidency. That's also why Germany committed the largest share of money to an overall investment of 750 million euros so far. Germany is giving, I think, 540 million. And this is also why the Secretariat, for example, is hosted at GIZ. If the UK were presidents of the G7 in that year, I would not sit here. Maybe someone else from the UK would do it. This is how policy making in this level typically works. And then based on that initiative in 2017, 2018, the partnership was founded. We started with 45 members. And then the writing process for our Vision 2025 started, which is now our key strategic document. And it puts out the goals for our work, with the overall goal to strengthen financial resilience of poor and vulnerable people until 2025. And there are 4 work streams that are endorsed under this Vision 2025. The first one is strategic guidance and convergence. So we try to achieve convergence between the strategic goals of our members, and we try to take that to a political level. In workstream 2, we try to improve action implementation. This is mainly happening in the program alliance, as I just said. Workstream 3 summarizes the working groups under capacity building and knowledge management. And then workstream 4, the collaborative network. Nowadays, the collaboration is mainly happening online, but typically we would gather the partnership once a year. But we also have some innovative tools to enable collaboration. So for example, we have Risk Talk, which is an AI-based platform where people can ask questions, and then these questions get matched to specific experts from the field, and then they answer that. That's a pretty cool product, actually. Yes, and with the next section, I want to come a bit into my work that I'm doing at the InsuResilience Global Partnership. I'm responsible for the monitoring and evaluation that's happening under the multi-stakeholder partnership that we are. And I brought this sketch because I really like it. It's about the question why we do have so many metrics, and we do have a lot of metrics on measuring financial resilience. And I wouldn't fully agree with the explanation that is given in the cartoon. Sometimes we do cherry picking, but most of the time we work with the explanation that resilience as a concept is a multidimensional one, and it's really difficult to measure. So there's no straightforward approach to measure strengthened or increased resilience of an individual. And to overcome that challenge, we needed to come up with a fully comprehensive monitoring and evaluation strategy. And I will show you some of the core elements of that. So we started, of course, with a theory of change that identifies the causal chains between our activities, the activities of the implementing partners, and the overall goal of increased resilience. And building on that theory of change, we now have 6 result areas that cluster our impact indicators. And under these result areas, we have 19 indicators. I won't go into the detail of all of them. And this work is supported by two central work streams. One of them is our annual survey. So once a year, we collect implementation data from all institutions that work with us on implementation. Currently, I think it's 22. And another new endeavor that we're going to launch this year is the evidence roadmap, because of course, our framework does not capture the full research gaps of impacts of climate and disaster risk finance and insurance. And there is the need for more in-depth research on some of the topics. So for example, the gender topic is a really big research gap. There's really few evidence on how insurance solutions can overcome the burden of climate change for women. So we definitely will commission some research under the evidence roadmap on that topic throughout the next years. And the next thing that I want to show you is the our indicator framework. It looks pretty complex, and it is sometimes complex to communicate. And this is a big challenge for us as a secretariat, because we are somehow the link between the technical level, the people who do the implementation, ourselves calculating progress under all these indicators. So there's a methodology behind each of the indicators, but we also need to communicate these results to the political level, for example, to the high-level consultative group. And these people, they don't want to go into the nitty-gritty of formulas, how are beneficiaries of insurance solutions, micro-insurance solutions in Zambia calculated. They want to see the big figures. So that's really the challenge of this evaluation framework. And you can see highlighted in orange our lead indicators for each of the result areas. The first three result areas tackle the quantitative side of the coin a bit. So it's about how many people are covered, how many countries have a DRF, a disaster risk finance strategy, in how many countries do we see a macro level solution that would be a sovereign risk pool insurance policy, for example. And then in the second set of result areas, we shed some light on the qualitative side of the coin. So what does actually change within the solutions? So for example, we want to track the low cost of the coverage that is provided, or we want to track whether the protection gap for the vulnerable people is actually becoming a bit smaller. Under the evidence result area, we also want to see whether more open access catastrophe risk models are applied in the solutions in the field. And then, as I said, it's our task to translate this into political figures. And for each of the lead indicators, we have a big target, which is at the same time the common ambition for Vision 2025. So until 2025, we want to see 500 million beneficiaries under insurance and risk finance solutions of InsuResilience. That's a pretty ambitious goal. And it's also a pretty political goal, I have to admit. And maybe if we were included at the very beginning of the target setting, this number would look slightly different. But we do work with it. And then another interesting one is we want to see 80 countries with a comprehensive disaster risk finance strategy in place. And here it becomes really difficult. What does comprehensive mean? What is a comprehensive disaster risk finance strategy? When we started, we didn't know. I think now we are a bit closer to that. We put up a list of quality and credibility criteria for risk finance strategies of countries. And in this year, we're going to assess the first set of countries. I think we have 34 countries that were identified, and we're going to go through all of their strategies and to check them against our criteria. And as you might remember, I started with the protection gap of vulnerable people, which is currently covered only to 3%. And the goal is that by 2025, 15% of the losses experienced by vulnerable people and poor people are covered by solutions under InsuResilience. That's also a pretty ambitious one, but I'm pretty full of hope on that, because there are so many solutions underway, and I'm going to show you that in a second. So looking at the numbers, we do see that in 2015 some of the solutions were already there before InsuResilience was started. So that's why 31 million people were already covered under insurance solutions in 2015. These were mainly the sovereign risk pools. And then over time, we do see some really substantial growth in beneficiary figures until 2020, where we measured 137 million people covered under solutions of InsuResilience according to our methodology. And these figures are reached by 22 implementing programs, which have 218 projects. That's really a crazy number to me. In 101 countries. And some of the projects are really in a very early stage. And that's also a learning for us and also for the political side. The implementation of insurance solutions takes a lot of time, because in the beginning you need to shape the regulatory environment. You also need to find out how the demand of the people is actually shaped, because people don't wake up in the morning and have the will to buy insurance. So you really need to work on financial literacy. You need to work on insurance understanding and risk understanding. And then over years and years, people start working with insurance in their very own risk management. And that's why we are quite helpful that we will see some substantial growth until 2025, because some of the solutions are really underway for a while now and reaching scale in the next years. Another thing that I might show you at this point, maybe I can switch screens. I hope you can see it. Is our world map. That's my baby. Can you all see it? Then I need to switch that. Freigabe. So now you should be able to see it. Great. So all the data that we collect is presented in this world map that you can find under annualreport.insuresilience.org. I can also post it to the chat. And when you go into the map, you will see small dots with numbers on all the shaded countries. And then when you have a look at the Philippines, Indonesia, for example, you can see how many beneficiaries do we have in that country, which programs are active in that country. So this is, for example, the Asian Development Bank, the Global Index Insurance Facility, the Global Risk Financing Facility, and a disaster risk finance and insurance program also by the World Bank. You can see which phase of the risk continuum they are tackling, whether they tackle anticipation or relief or recovery or reconstruction. You can also see which perils in the country are covered. So for example, in Indonesia, we cover basically everything, even extreme cold. Sometimes even I'm surprised about the data. And you can also see that in Indonesia, there's already a disaster risk finance strategy in place, which still needs to be assessed from our end, but it was at least identified. And yeah, there will be more data added to this world map over time. So we also have individual country level risk profiles for each country. So people can go into the map and see and access what are the three most common climate hazards in Brazil, for example, and what's the overall readiness for insurance solutions in Brazil. We are working on a big data collection process there together with the United Nations University. So now I need to go back to my slides. And we are also coming to an end. with a short outlook. 2021 looks pretty promising so far, I have to say, in the climate debate. And there are three maybe big streams of work going on there. I think we all heard about the Joe Biden Leaders Summit on climate change that happened the last days. It looks pretty promising. So we actually are pretty glad as a G7 initiative that the US are re-entering the market of climate change adaptation. Over the past years, it has been really difficult to communicate with the US colleagues because we were allowed to talk about resilience when they should sign it, but we were not allowed to mention climate change in public documents. So it was really stressful to work with the US. And at the same time, the UK popping up as a big player in climate change adaptation this year. A, they have the G7 presidency this year. B, they have the COP presidency this year, and they're hosting the climate change conference in Glasgow in November, hopefully, probably online. And third, they are also post-Brexit looking for opportunities where they can place themselves in the global multilateral agenda. And it looks like climate change has been their topic of choice. So also with the climate change conference happening as a first big multilateral conference for the UK as a host post-Brexit, this is really the place for them to show that they can work independently from the European Union on such a global scale. So they are also putting in a lot of effort and money into the topic. And then there's also another interesting development that was maybe not so much on the news, but there's, as a response to the COVID crisis, a big initiative that is calling for a global crisis lookout institution, which will work in a way as a global risk manager. And that institution would oversee global risks, also compounding risks, and also financial flows. So the big sovereign financial flows to support countries in the face of disaster would also be managed or overseen somehow by such an institution. And it might be launched by the G7 under the UK presidency as well this year. So there's quite some momentum on the topic. Pretty interesting to see how it's going forward. We're following the discussion with interest. We're trying to shape it here and there with the strings that we can pull. And yeah, that's the work we're doing. I hope that there are some questions, because I always find it pretty inspiring. And yeah, first of all, I would like to thank you for your attention. And yeah, let's see how you put me on the spot.